Why learn the stock market?
So what exactly is the stock market and how does it actually work?
Stock market versus share market. Any difference?
1. Introduction. Why learn the stock market? Most people hear about the stock market but think it's only for the rich or financial experts. The truth is, anyone can learn it. Learning how the stock market works gives you the ability to grow your money, beat inflation, and create long-term wealth. In 2025, more young people than ever are investing thanks to mobile apps and online platforms. This chapter motivates beginners by showing why it's worth their time. 2. What is the stock market? Explained simply. The stock market is a marketplace of ownership. Instead of buying groceries, people buy and sell shares of companies. A share is just a piece of ownership. If the company grows, your share value grows too. Imagine your favorite tech company. By owning its stock, you're literally a co-owner. This chapter introduces the basic idea of stocks in the simplest way possible. 3. Stock market versus share market. Any difference? In the US, people say stock market. In India, Nigeria, and many countries, people say share market. Both terms mean the same thing, a place where shares or stocks are traded. This chapter clears up confusion for beginners so they know there's no real difference. 4. How the stock market works, the exchanges and brokers. The stock market works through exchanges like the NYSE, Nasdaq, NSE, India, or NGX in Nigeria. Companies list their shares, and investors trade them through brokers or apps. You don't have to go to a physical building, it's all online now. This chapter explains the system that makes trading possible, using easy examples. 5. Types of stocks, common versus preferred. Common stock ownership plus voting rights plus possible dividends. Preferred stock no voting rights but fixed dividends. This chapter explains the two main stock types so beginners know what they are buying. 6. Why do stock prices go up and down? Prices change daily because of company performance, profit/losses, economic conditions, government policies, global news, oil prices, wars, pandemics. This chapter explains market fluctuations in real-world terms, showing why the market is never stable. 7. Risk and reward, the beginner's reality. The stock market can grow your money faster than savings accounts, but it also comes with risks. This chapter explains that big returns equals big risks. Beginners are advised to focus on long-term investing, which historically beats inflation and builds wealth. 8. Real-life examples of success and failure. If you invested $1,000 in Apple in 2000, now worth over $50,000. If you invested in a company that went bankrupt, you lose everything. This chapter uses stories to explain why research and patience are essential. 9. How beginners can get started, step by step. 1. Open a brokerage account or app. 2. Deposit money. 3. Start with small amounts. 4. Buy beginner-friendly options, like ETFs. This chapter gives practical steps for absolute beginners to start investing safely. 10. What are index funds and ETFs? Index funds and ETFs are baskets of many stocks. Example, the S&P 500 index fund holds 500 companies at once. If one fails, others balance it out. This chapter explains why beginners should consider funds over individual risky stocks. 11. The power of diversification. Don't put all your eggs in one basket. Spread investments across sectors, tech, healthcare, finance, consumer goods. This chapter explains how diversification reduces risk and protects you during market downturns. 12. Common beginner mistakes to avoid. Chasing hot stocks without research. Panic selling during dips. Ignoring fees and commissions. This chapter teaches beginners how to avoid costly mistakes that most new investors make. 13. Investing versus trading, which is right for you. Investing long-term, stable growth. Trading short-term, high risk. This chapter shows the difference so beginners don't confuse the two. Most should stick to investing first. 14. Understanding dividends and passive income. Some companies share profits as dividends. Example, Coca-Cola has paid dividends for decades. Dividends are like bonus cash just for holding the stock. Over time, reinvesting them builds passive income. 15. Bull and bear markets explained. Bull market optimism, prices rising. Bear market fear, prices falling. This chapter helps beginners understand the cycles of the market and why patience pays off. 16. Compound interest, the wealth multiplier. Compounding means your money earns money, and then that money earns more money. For example, $1,000 at 10% yearly growth becomes $2,594 in 10 years, $6,727 in 20 years, and $17,449 in 30 years. This chapter shows how time grows wealth exponentially. 17. Global stock markets, US, UK, India, Nigeria and more. Markets exist worldwide. US Dow Jones, S&P 500, Nasdaq. UK FTSE 100. India Sensex, Nifty 50. Nigeria NGX All-Share Index. This chapter explains global investing opportunities and how markets are interconnected. 18. Dollar cost averaging, DCA, strategy. Investing a fixed amount regularly, weekly/monthly, regardless of market ups or downs. Example, investing $100 every month. Over time, you buy at highs and lows, averaging out costs. This chapter introduces a stress-free beginner strategy. 19. The mindset of successful investors. Patience, discipline, and research. Warren Buffett says, the stock market transfers money from the impatient to the patient. This chapter explains why mindset matters more than quick tricks. 20. Closing words to your next step in 2025. Beginners should open an account, start small, diversify, and stay patient. The key is consistency, not chasing quick riches. This chapter motivates viewers to take action today, with confidence and knowledge.